Greetings to you all, your boy Chatmaster here. Welcome to Chatmaster FX. Today we are going to look at the Quasimodo Snipper, which is abbreviated as QMS. This is one of the magic comrades. Let's go straight to the business of today. So this is the anatomy of the QMS. The other name of the QMS is failure to return to base break base, which is FTRBBB. So guys, as you can see, as I have alluded before in other videos, you can see that the course has got its own building blocks, and these building blocks consist of the FTR, the flag limit, the price action zones, all those things, and the first time back, all those things, they actually makes a significant contribution towards the standards of all the SOPs that we trade at Chatmaster FX. So you need to be able to be familiar with those concepts, because once you become familiar with those concepts, then it helps you to understand every standard operating procedure that we will be dealing with at Chatmaster FX. So as you can see on the anatomy of the QMS, this is the first condition. As you can see, guys, that the price was dropping down. So once the price dropped down, it actually created a base here. So once we have a base here, we can see that the price rallied up. So this one becomes our demand zone. So we have a drop, base, rally, A, D, B, R. So once you see this condition, there was a Quasimodo level that was formulated here. And once we have a Quasimodo level here, we can see that the price came back to the demand zone, and it did not engulf the demand zone. It actually came for the first visit, which is the first time back. So once the first time back happened here, the price went up and engulfed the QM level and created a new higher high. So once you have a higher high here, and this now is our high, then you know that this one is more likely to become a Quasimodo. So this one is the cap area, here, and what happened is that the price dropped now. And once the price dropped, it actually engulfed the demand zone. Once the demand zone is engulfed, then now we are waiting for a selling opportunity, because condition number one is that we have a demand zone, and on this demand zone, you can see that the price on its first time back, it actually came and visited the demand zone on first time back, and it created a QM level. So you have a QM level here, and we have a condition that the higher high has been created, and finally the demand zone was engulfed. So once you see that there's an engulfment in the demand, then you know that the conditions of the QMS have been met. So in order for you to have a full understanding of this SOP, you need to go back and watch the Quasimodo video. Once you watch the Quasimodo video and you familiarize yourself with the basic Quasimodo, the intermediate Quasimodo, and the advanced Quasimodo, once you have that background, then you can be able to trade this magic comrade. So I'll put the link for that video. It's gonna help you. If you have not watched it, you need to go and watch the Quasimodo video. So guys, this is the Quasimodo Snipper, as you can see. So you put your stop loss just above the cap area. Remember, this is our cap area, and we put your stop loss just above here, and your take profit comes on the depth of the demand engulfment. So guys, this is the anatomy of the QMS. So these are the terms and conditions for a sales setup of the QMS. So remember guys that for the sake of simplicity in this course, for this standard operating procedure, we are only going to look for a sales setup. So once you master the sales setup, the mentees are advised that they need to go and familiarize themselves with the buy setup. So the buy setup is just the opposite of this setup. It's the flippy of this setup, but the conditions will be just the same. So yeah, first thing, understand the sales setup. And once you understand the sales setup, it's gonna be easier for you to understand the buy setup. So guys, these are the terms and conditions of this magic comrade. So there should be a demand with a first time back. Once we have a demand with a first time back, then there should be a Quasimodo level, as you have seen on the anatomy. The price should then engulf the demand. Once we have an engulfment of demand, then that's the final push, and you know that the conditions of the Quasimodo have been met. Then you wait for the price to come to the Quasimodo level. Take note that on this strategy, having a PA is not mandatory. A PA is only mandatory in the big 5 strategies. On all the big 5 strategies, you need to make sure that there is a price approaching. If you don't have a price approaching, as I alluded before, then you cannot be able to take that trade for the big 5. But on the magic strategies, you actually see that sometimes the PA just comes as an extra confluence of the trade. If you find a PA on the magic strategies, it's actually a bonus. It's a bonus, and it makes your confluence stronger. Okay guys, so you can see that the entry is at the QM level, guys. The entry is at the QM level, and the stop loss, put stop loss above the head of the higher high of the Quasimodo. So the target profit, put target profit at the bottom of demand engulfment. That's where you put your demand. That's where you put your target profit on demand, on the depth of the engulfment of demand, as you have seen on the anatomy. So these are the conditions, these are the rules, and you have to follow the rules. Do not create your own SOP. Follow the rules. Once you follow the rules, and I can assure you that you can be able to trade these setups successfully. So guys, let's go to some chart examples so that we can be able to spot these things on the actual charts. So this is example number 1. We are in volatility 25-1S index on the H1 time frame. So guys, as you can see here, we have our demand. Once we have our demand zone here, we wait for the price to make a first time back. Once the price makes a first visit to the demand, then we can wait for the demand to be engulfed. Once the demand is engulfed, then you can be able to trade your Quasimodo. So in this case, guys, as you can see that we had a Quasimodo level here. There's a Quasimodo level here. It's just slight, but you can see that the price pushed up here. It came and created a low here and created a higher high. So, and came back and engulfed this low. So this becomes a Quasimodo. So if you were looking at this Quasimodo also, it might have been a good trade as well, but you would not trade on the return to this, because in order for you to consider this as your entry point, you would need the price to first engulf the demand. So once the price actually engulfs the demand, then that's where you can be able to place your trade. So our QM level is here, and it's not that visible, but it's there. This is a QM level. So this is what happened to the price. So you sell at the QM level, and maybe you put your stop loss just above the higher high here, or just to be safe, you can put your stop loss above this higher high if you are considering this Quasimodo level. But generally, maybe just to allow the trade to breathe, then maybe you can put your stop loss here, and your take profit would be the depth of engulfment of demand. So you put your surface take profit here, maybe you can leave some of your trades to run, but this is the ideal surface take profit for this setup. So as you have seen, guys, that you need to have a demand zone. Once you have a demand zone, then the price creates a QM level somewhere, somehow. When the price came here for first time back, the first time back should be there, guys. If there is a first time back, then the price goes up to create whatever it creates, a Quasimodo. Then you wait for the price to engulf the demand. Once you have the engulfment of demand, then you can be able to sell as the price returns to that Quasimodo level. So as you can see, guys, that we are following the rules. You need to follow the rules if you want to be successful in this industry. So let's go to example number 2. We are on volatility 25-1S index H1. So guys, as you can see here, that we have our demand. We have our demand here. So as we have our demand here, what happened with this demand? This demand, there was a first visit, second visit, third visit here. So generally the price came to visit the demand. So the first time back or the visit should be at least 1. If you have a 1 visit, it's fine. Even if you have 2 or 3, then it's fine as well. But even 1 visit is okay. So once you have your visits here, and you can see, guys, we have a Quasimodo here. We have a Quasimodo here, guys, because the price made a rally here, and it dropped and created a low, and it went and created a higher high. So this is the QM level. So you'll be waiting for the price to come, guys. This is what we call the sniper. The sniper, guys, as you can see, you entered on the rightful time. And there was no drawback here. So you see this low was engulfed, so you wait for the price to come after engulfment. So you may put your stop loss just above this high, so that you may give your trade to breathe. Or if you are an aggressive one, you just put it just above this high. But sometimes it's good to allow the trade to breathe, as you can see here, guys. So you put your surface take profit here, maybe you can leave your trades to run. But you had actually logged some of your profits here. So guys, this is example number 3. As you can see that we have demand, and on this demand there was a first time back, and once we have a first time back, you'll be ticking your boxes. Once you see that the demand is there, you tick your box. Once you see that there's an FTB, you tick your box, and there's a Quasimodo level somewhere, somehow, then you tick your box. Then you tick the box. Then you wait for the price to come to that Quasimodo level. Then you can be able to place it. And as you can see, guys, that this trade was actually doing some form of an accumulation, kind of, as it approached this Quasimodo level. And as you can see, guys, that this is one of the examples of what we call momentum shift. As you can see that the price is had great momentum to the downside, and what happened is that as it was going up, it actually had weak momentum, strong momentum. So these are extra confluence, and this is kind of an MPL, guys. There's kind of an MPL zone here on this QM level. So those are some of the extra confluence that you'll be looking at as you trade this trade. So yeah, this is how you can be able to trade this setup, guys. You need to check all your boxes. All your boxes need to be ticked. You don't need to break the rules, guys. You need just to follow the rules. Once you follow the rules, then you know that you are guaranteed to be successful in this market. So let's go to example number 3. On example number 3, we are on range breaker 100 index on H4. So as you can see, guys, that we have our demand zone here. Once you have a demand zone, we are having our FTB, which is our first time back. So as we are having our first time back, guys, what we wait for? We wait for this demand to be engulfed. Once there is an engulfment of this demand, then we are now looking to see how the price is going to react when it comes to this QM level. So as you can see, guys, that we have a QM level. So if you don't have a QM level, guys, somehow, then it means you don't have to take that trade. So with our obvious QM level here, so what happened here? We have also a decision point here, a DM type 1, yeah, DM type 1. And you can see, guys, this was a sniper entry, guys. There was no drawdown here. There was no drawdown. And the stop loss, you just put it above this Quasimodo level. So, guys, as you can see also, that as the price was approaching this QM level, it actually approached it in the form of accumulation. There was accumulation as the price was coming here. So simply accumulation is where all the demands are taken out. This demand was taken out by this one was taken out by this one was taken out by this one was taken out by this one. As the price went up to the QM level. So once the price came to the QM level, then you can be able to place your trade. So tick all your boxes, guys. There demand, yes, it is. Is there an FTB? Yes, there is. Is there a QM level? Yes. So this is kind of an MPL also. As you can see, this kind of a resistance line, and the price was able to break that one in form of a fake out. So this one might be your MPL zone. And if you have actually studied some of our standard operating procedures, you will see that there is also what we call momentum shift, guys. As you can see, as the price dropped here, it actually dropped with strong momentum, but the price as it went up to that QM level, it went in form of a weak momentum. So this is what we may call momentum shift. So guys, these are some extra confluences that you need to look for as you trade this kind of a setup. So let's go to example number 4. So on example number 4, guys, we have our demand here. Once we have our demand here, what happened? And this demand, there was an FTB. The price was able to come to this demand for the first visit. Once we have a first visit, then we know that it actually have met the conditions of the Quasimodo Snipper. So the price went up and created a QM. There was a QM level here and a higher high, so we have a QM. So once the price engulfs the demand, then we wait for the price to come back to the QM level. Once the price comes back to the QM level, then you can be able to place your trade and put your stop loss just above the higher high here of the Quasimodo. So guys, as you can see, guys, the momentum shift, which is one of the SOPs that we actually look for at Chartmaster FX. As you can see, guys, that we had a strong momentum to the downside. And what happened? We had also a accumulation here. The demands were being taken out, the orders were being taken out as the price was coming to this QM level. So you can see, guys, those who know the setup of the momentum shift, that you will be having a strong momentum here, then you have a slower movement of price. This goes to the QM level or to the MPL. So this is an MPL, guys. As you can see, there's an MPL zone here. So you see this confluence. So momentum shift and the Quasimodo Snipper, they're actually brothers. They are twins. Yeah, they confluence each other. So you have to look at that, and you also need to understand what we mean by momentum shift. Those who don't have an idea of momentum shift, you must join our Telegram group and join Chatmaster FX community. Then from there you see the standard operating procedure, and you actually know the anatomy and how we can be able to trade momentum shifts, and how to spot them, and how to trade them successfully, and how to use them as extra confluency for a standard operating procedure. So this is how you would actually trade this one. So guys, you need to check all the boxes, guys. We have our demand here. Once we have our demand, we wait for the first time back. Once we have the first time back, we ensure that there is a QM level somewhere, somehow. Then you can be able to wait for the price to approach that QM level. So many setups that have a momentum shift, they are actually high probabilistic trades. So usually this setup goes hand in hand also with the compression, which is what we call accumulation on this course. Although they are different, but we can use them interchangeably. So usually the price approaching that works here, that actually can act as an extra confluence with the accumulation. The accumulation, it works very well. So this is our target profit, guys. So let's go to example number 5. So in example number 5, guys, what do we have here on volatility 25 index on M30? We have a demand zone here. Once you can be able to spot your demand zone here, what happened? The price came back to this demand zone on the first visit. Once we know that we have a first visit, we wait and check for a Quasimodo level. Somewhere, somehow, we have a Quasimodo level here. And what happened? We have a higher here. So in this case, guys, you can see that this demand was engulfed. Once we had an engulfment of this demand, we would wait for the price to come to this QM level. As the price comes to this QM level, then you can be able to place your trade. In this case, guys, you can see there was a strong momentum to the QM level. As we had a strong momentum to the QM level, the price gave you an indication that we are about to turn here. As you can see here on the nature of this cap area, that the price started to slowed down as it approached the QM level, giving us a fine indication that the price is about to stop here. And the price finally was held by the QM level, and the price dropped, and you put your stop loss just above the higher high. So the target profit will be here on the depth of engulfment. Then once you take your profits here and you put something in your account, then you wait for the other trades to run. If you are someone who leaves other trades to run, but knowing that I've already secured something. So this was the tutorial for the Quasimodo Snipper. So those who want to understand further and be able to join the community, you are free to join, guys. In our free community channel, you'll be seeing some students posting their flashcards there, and the flashcards actually helps you to understand some of these setups in a better manner. So once you join a community, it may help and actually fasten your learning process, because if you learn these things alone, it might not be the best for you. But if you join a community, it might help you, because you may gain some good ideas from other of the members of the Chatmaster FX community. So yeah, guys, don't forget to like, share, and subscribe, and hit the notification bell so that you don't miss any of the content that we are going to put on our channel. So yeah, it's your boy Chat Master here, signing out.